Hey everyone, welcome to my channel. I'm Doris. I'm here to talk with you about the market updates today. And today let's talk about the South Korean stock market. It has surged for more than 2% in the early trade, the KOSPI index, after the government announced a ban on the short sellings of the Korean stocks. And at the same time, the small cap Kosdaq index rose 3.5% at one point. South Korea's Financial Commission said that on Sunday that it will ban short sellings of stocks until June 2024 to allow regulators to aggressively impose rules and systems. South Korea reinstated the ability for short sell of the two indexes constituents in May 2021, and the ban imposed during the pandemic remains in effect for more than 2,000 other stocks. At the same time, Thai international banks that have been involved with the short holdings in the Kosdaq index right now will face investigation. According to Brian Fidus, an analyst at Smart Karma Holdings, another ban on this widely used trading strategy could hamper South Korea's effort to seek a boost in its stock market position. The short sell ban will further jeopardize the South Korean opportunity to move from emerging markets to developed markets. As short sellings no longer take effect as breaks to outrageous valuations, it is expected that the bubbles will form in the corners of the market favored by retail investors. Short selling accounts for only a tiny fraction of the $1.7 trillion South Korean stock market, accounting for about 0.6% of KOSPI's market capitalization and 1.6% of KOSDAQ's market capitalization. Exchange data shows. The regulator's decision comes at a time when parliamentary elections are to be held in April next year. Some ruling lawmakers have urged the government to temporarily halt short selling of shares in response to protests from retail investors. Most short selling in South Korea is carried out by institutional investors. Saudi Arabia and Russia also affirmed their commitment to cut their their supply of oil until by the end of the year. They plan to cut by more than they have announced their plan to cut the oil supply by more than 1 million barrels per day back in July, and that they plan to continue this plan. The two leading nations of the OPEC Plus alliance announced the plan in separate official statements on Sunday. Riyadh has cut crude oil production by 1 million barrels per day, while Moscow has cut exports by 300,000 barrels a day, further limiting supplies on the top of production cuts agreed with other OPEC Plus countries. This will post an increasing cost on the businesses and the factories worldwide as the limiting supply will continue to push up the crude oil prices and may also affect other natural energy resources. According to a statement published by Saudi press agency, Saudi Arabia will assess its production next month and will consider extending the cut, increasing the cut. In a separate statement, Russian Deputy Prime Minister Alexander Novak echoed Saudi Arabia's comments on future production policy. Oil prices have been volatile in recent weeks, with fears that the clash in the Middle East could escalate into a broader regional conflict, including Iran, which is a major crude oil producer. Brent oil futures settled to below $85 a barrel in London on Friday. According to International Energy Agency, the broader conflict could promote Saudi Arabia and Russia to revise their production cut plans. The agency has warned that the high oil prices pose a risk to inflation and global economy. For now, however, OPEC and its partners seem to intend on tightening tight control on supply. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.